So we are taking up to the fire insurance. Nothing new in fire. If you have any questions, first we'll discuss that question. If at all you want to discuss anything, anyone have any queries from the brokers? किसी का कोई किसी तरीके का फायर इंश्योरेंस से रिलेटेड सब क्वेश्चन हो तो पूछ सकते हैं. Okay, then we'll continue. So fire is one branch where all the basic principles of the general insurance are applicable. Like principle of insurable interest, utmost good faith, indemnity, proximate cause, and both the corollaries of indemnity like subrogation and contribution. So whenever a fire insurance is required, basically these are the policies available under the fire insurance. First three policies were introduced by the IRDA on 1st January 2021. One of them is for the residence houses, that is dwelling insurance. Two are for the commercial properties, Bharat Sukshma Udyam and Bharat Laghu Udyam. But the maximum sum insured covered under these policies are 50 crore only. Over and above 50 crore, standard fire and special peril policy is required, or industrial ordnance policy. So there are major changes in these policies, because fire is one subject which is covering plenty of things, like building, plant and machinery, furniture fixture, stocks, pipelines, etc. With the introduction of these policies, IRDA finalized how to decide the sum insured, what are the inbuilt coverages, what are the innovative coverages, and how these policies differs. So when it comes to the fire, in the insurance parlance, fire means there has to be three things: actual ignition, purely accidental or fortuitous fire, or there must be something on fire which ought not be on fire. That means any property, any material, any furniture fixture or machinery which was not on fire has accidentally caught fire or any got damaged. So fire is a self-sustaining process of rapid oxidation that needs three things: fuel, oxygen, and temperature. Anything can catch the fire. It may be a solid, liquid, vapor, or gas. Anything and everything is susceptible to fire. Because in solids, wood, fabric, synthetic material, packing material, even the hard materials are subject to fire. So not only the fire damages are payable under the fire policy, but related damages which are caused in the process of extinguishing the fire are also payable, like smoke damages, water damages to extinguishing fire, losses incurred by insured in attempting to check the progress of fire, damage done by firemen, they are also payable because they are part of the process. So whenever there is a proposal for fire insurance, the underwriters are evaluating the following things: that is construction of structure, occupancy, nature of flooring, height, floor and wall opening, exposure, light, heating and power, place or situation, protection, and if at all there is any claim history. Then what was the time of loss? These are the underwriting parameters. On that basis, the underwriter is deciding the rating of the proposal plus decision on acceptance and rejection of the proposal. So in previous policy, the language was very complex. In these two policies, the language has been simplified. Mis-selling has been stopped. There is a clarity of coverage and there is a standard method of deciding the sum insured now. But the question is, both these policies are divided on the basis of the sum insured and maximum sum insured covered under these commercial policies, that is Bharat Laghu Udyam Suraksha, is 50 crore only. Not more than that. If the policy is required for more than that, then a standard fire and special peril policy has to be taken. So these policies came into force from 1st April 2021 for all purposes. Now, if the company has issued a package policy wherein fire is a section, so even in those policies, these commercial policies are applicable. And under that first section, which is compulsory, that is fire insurance, the policy will apply according to the sum insured limit. If it is up to 5 crore, the Sukshma Udyam will apply, and over that up to 50 crore, Laghu Udyam will apply. So in all the package policies of all the general insurance companies, normally the same practice is followed. First section is mandatory and minimum number of 2 or 3 sections are compulsory. So this is the parameter which decides the policies up to 5 crore, Sukshma Udyam. Over 5 to 50, Laghu Udyam. And this sum insured is based on value of risk at one location. So any kind of risk which is related to the non-industrial risk like hotel, office, shop, hospital, or manufacturing risk, or storage risk, or any type of utilities and tank risk, they are all subject to fire insurance and they are covered under the fire policies. So majorly with the amendment in these two policies, number of perils were increased from 12 to 14. Now no peril is allowed to be deleted. Sum insured will decide which policy is applicable. Compulsory excess is fixed, that is 5,000 in Sukshma Udyam and 5% of each claim, minimum of 10,000 rupees in Laghu Udyam. In case of terrorism, this will be different. Minimum premium would be 500 plus GST and 1,000 plus GST for Sukshma and Laghu. So as far as perils definitions are concerned, few definitions were changed, like the definition of fire was changed. Now this peril include own fermentation and natural heating and spontaneous combustion without any extra charge, because this is inbuilt peril now. Similarly, in bush fire, forest fire and jungle fires are automatically covered without any extra premium. Third definition of impact damage was changed, wherein additional peril of aircraft damage was merged. 3 new perils were added to the policy, which were earthquake, terrorism and theft. So this theft is applicable in the limited sense, because theft in isolation is not covered. But if it is followed by any other peril, then the loss will be payable under the policy. No peril is allowed to be deleted by Jan Insurance Company or on the basis or on the request of the insured. That means all the 14 perils will continue from the date of issuance till the expiry date. So these are the 15 add-on covers which are applicable to standard fire and special peril policy as on date even. But in these Sukshma Udyam and Laghu Udyam, the IRD has tried to merge all these add-on covers to make inbuilt part of the coverage without any extra premium. And almost all of them are included with certain stipulations or certain conditions. Say for example, the previously covered add-ons have been revised. Their limit is enhanced from 3% to 5% for architect and surveyor and consulting engineer fee, and 1% to 2% of the claim amount of removal of debris. But certain other add-ons which are included without any extra cost are additions, alterations or extensions, temporary removal of stocks, cover for specific contents, startup expenses, cost compelled by municipal regulations, stock on floater basis, preloaded software, and stock as interest. For these risks, no extra premium is charged now. But as far as this floater risk is concerned, this is free for Sukshma Udyam only. But in Laghu Udyam, the 10% loading will be charged. Because this floater cover is applicable where the multiple locations are covered under one sum insured. Multiple locations are covered means for one unit, if the goods is stored at various other locations, maybe within the state or beyond the state, but within the country, those locations can be covered under the same policy if the sum insured limit is up to 5 crore only. In that case, nothing will be charged extra. But if the sum insured is exceeded 5 crore rupees, in that case 10% loading will apply. Now, sum insured standard has been decided because all properties under the fire policy will be insured on the reinstatement value basis. That means buildings, plant and machinery, furniture, pictures. The sum insured would be on the basis of reinstatement value basis. But for the stock, according to the nature of the stock, the sum insured will be decided. If it is a raw material, it will be insured at landed cost. If it is stock in process, input cost will be the sum insured. If it is finished stock, then the manufacturing cost would be the sum insured. For the precious items like precious stone, bullion or unset, agreed value would apply. Agreed value means the value agreed by insured and insurance company. That is normally on the basis of the invoice or the valuation certificate. But as far as properties are concerned, like building, plant and machinery and furniture, pictures, they all will be insured on the reinstatement value. So from that point, the reinstatement value becomes very important. You all must know what is the reinstatement value. Because we call reinstatement value, that is the current replacement value of that property. It has nothing to do with the value of purchase or value of the market or value of the books. Today means on the date of loss. At what value the property can be replaced or reinstated, that is called reinstatement value. There is no application of depreciation. This is simplified with certain examples. So reinstatement value would be the sum insured of the properties. As far as goods which is sold but not delivered is concerned, the contract price will be payable in case of loss. Now these are the risks which are covered without any extra premium. They are known as the innovative covers under the fire policy. They are typical in nature, which have nothing to do with the fire insurance, but part of the coverage, inbuilt coverage for all general insurance companies under the Sukshma Udyam and Laghu Udyam policies. That is money risk up to 50,000, document risk up to 50,000, computer information and data up to 5 lakh rupees, and personal effects of visitors or directors up to 3 lakh rupees. This 3 lakh is bifurcated as maximum 20% and 15,000 rupees per person. Another benefit given by the IRDA to the insured is that if the property is not insured on the reinstatement value, in that case, if there is any loss, the underinsurance will be waived up to 15%. That means this will be presumed that there could be the fluctuation in the value, maybe up to 5%, 10%, 15%. So for that reason, the insured should not suffer any loss. But if it is more than 15%, in that case, the average clause would apply. Say for example, in a company, the policy taken is of 5 crore. One fine morning there was a loss of 1 crore rupees due to fire. When the loss was inspected by the surveyor and the assessment of loss was done, it was observed that the policy was not adequate because the value of the property was 5 crore 50 lakh while the sum insured of the policy was only 5 crore. So it was underinsured. It was underinsured by 10%. So the policy was subject to average clause and the 10% loss to be deducted. But here comes the defense which is provided by the IRDA. Up to 15%, there will be waiver, nothing will be deducted. So the insured is saved and average clause is not applied. But in a different case where the sum insured is more than 20% is underinsured, in that case, there will be no bifurcation that 15% is waived and 5% is deducted. In that case, total 20% underinsurance will be deducted from the claim amount and the insured would be loser. Because property underinsured means saving a premium of few thousand rupees. But at the time of loss, there may be deduction of lakhs and millions of rupees. So that is not at all advisable. Property should never be underinsured under the fire insurance policy. Sufficient sum insured should be taken. It is in the interest of the insured. And you would never prefer to lose your interest or lose your insured. Now, stock held in trust is now free in the fire insurance policy. Stock held in trust was earlier an add-on cover available on extra premium, but now it is part of the policy. And this is most useful for the motor vehicle garages and dry cleaners, where the subject matter which they are dealing with is not belonging to them. Now that is covered under the policy. Similarly, additions, alterations or extensions are also covered without any extra premium. So the basic difference between these two policies is that sum insured will decide the policy up to 5 crore Sukshma Udyam and over 5 to 50 Laghu Udyam. Compulsory excess is defined. A start of expenses limit is defined, that is 1 lakh in Sukshma Udyam and 5 lakh in Laghu Udyam. Floater cover is free in Sukshma Udyam but not in Laghu Udyam. And the minimum premium is defined. So the basic things is that insured is coming to know at any date that this sum insured of the policy is not adequate, he can pay the additional premium and get the sum insured increased. This is possible till there is no claim registered on the policy, because sum insured is the maximum limit of the insurance company. The sum insured can be changed, but compulsory excess cannot be changed. So that point can be applied or suggested to the insured if the sum insured is not taken properly. In case of terrorism, the compulsory excess would be different. There are 8 add-on covers available with the policy. These add-on covers can also be sold with the policy, because you will get the extra premium and the insured will get the wider coverage. These 8 add-on covers are known as the installment protection up to 50,000 per EMI, claim preparation cost, loss of rent, and additional expenses of rent for an alternate accommodation. These are 4. And the next one is 5th accidental damage cover, involuntary betterment, expenses for loss minimization, and escalation clause. Out of these 8 available add-on covers, you can sell all the 8, you can sell 1 or 2 as per the requirement of the insured, because each add-on cover has a separate cost, and this is absolutely voluntary, optional, as per the choice of the insured. If it is required, you should take it. If the floater risk is to be obtained, the complete address of the location plus value of the stocks has to be given in the proposal form. Who can take this policy? Obviously the owner or the entrepreneur takes it, but it depends upon the situations. If it is sold, then the new buyer will take it. If it is given on lease, then the lessor will take it. If it is let out, then the tenant will take the policy. If the tenant is taking the policy, in that case the property will not be covered, rest of all the things will be covered, because the tenant does not have the insurable interest in the property. As far as restoration of sum insured is concerned, if any claim is paid during the policy period, this sum insured is reduced by the claim amount. So for the remaining period, or that is unexpired period of the policy, there is always a fear of the underinsurance, if at all there is any claim comes. So to remove that fear, sum insured should be restored by paying additional premium. That can be either paid as a difference amount of premium or can be deducted from the claim amount. So this is the way how it is dealt with. Now in this policy, or in both these policies, the premium quotes will be provided by support office. Policy will be issued by support office. In that case, you have to refer each proposal to support office. Only the underwriting team will evaluate the proposal and rate it. And once you are getting the consent of the insured, the policy will be issued from the support office. There are certain clauses which are applicable to the fire insurance, but they are also provided as and when required. If the insured is asking for that, they are available. Contract price clause is also there, designation of property clause is there, but it is on the basis of the requirement. So this is fire insurance. If you have any doubts, you can ask any questions, any doubts, whatever is in your mind. Whatever doubts do you have in your mind, you can ask. Because fire is not a new policy, we are selling it since last 3 years, and even before that. But since these 2 policies were introduced only from 21, so from 21 onward we are selling these 2 policies, but the standard fire and special fire policy since beginning, and that policy still continues as it is for over and above 50 crore rupees. This is the choice of the insured. If you want for over sum insured 50 crore rupees, you can take external fire and special peril policy or a compact policy which is known as the industrial low risk policy. So that option is always open. If you have any doubts, you can ask. Otherwise, check your mail ID if you have got the test paper. Anybody can confirm? Okay, please continue it.